students, 12th standard accountancy, chapter 3, illustration 16. John is a partner in a firm. He withdraws 1000 rupees per month regularly. Interest on drawings is charged at 5% per annum. Calculate the interest on drawings using average period. Okay, the three situations are given below. The first situation is if John draws at the beginning of the every month, and the second situation is John withdraw cash in the middle of the every month, and the third situation is if John's withdraw cash at the end of the every month. Okay, so what method we have to calculate? We are going to calculate interest on drawing under average period method. Okay, so we know very well about the calculation of interest on drawing under direct method and under product method. In this sum, we are going to calculate the interest on drawing under average period method. Okay, listen here carefully. John withdraws 1000 rupees per month regularly. Okay, so per month regularly means how many months in 1 year? There are 12 months. Okay, so we have to find out the total amount of withdrawing. Okay, so the total amount of withdrawing is 1000 rupees into 12 months. You will get 12,000 rupees. Okay, then we are going to before that, what is the interest on, what is the format for interest on drawing under average period method? So under average period method, the interest on drawing is calculated. The format is total amount of drawings into rate of interest into average period divided by 12. Listen here carefully. John withdraws cash 1000 rupees per month. So we have three methods to find out the average period. So per month means we have to take monthly wise. We have to calculate average period under monthly wise. Okay, so listen here. There are three situations are given here. If he takes at the beginning of the every month, so we have to take, if the beginning of the every month the average period is 6.5. How will you get this 6.5? If John takes 1000 rupees at the beginning of the every month, okay, regularly, so how many months in a year? There are 12 months, right? If he takes at the beginning of the every month means if John takes every month 5th, okay, if January month 5, February month up to December, he withdraw cash from his business at the beginning of the month. 5th means beginning of the every month, right? So if he takes drawings at the every month, beginning of the every month, you have to pay the interest. That means John have to pay the interest, that including that months also. Okay, if he takes January, he has to pay interest for taken drawing that January month, because he taken drawing at the beginning of the month. Okay, if he takes every month 5, so he has to pay that month also interest. He has to pay interest for taken drawing that including that month. So you have to add plus 1 month. Okay, so how many months he has to pay the interest for taken drawing? 13 months. Okay, so what is the average period for interest on drawing? You have to find out the average period divided by 2. Okay, so then you have to cancel it. You will get 6.5 months out of 12. He has to pay the interest for taken drawing for 6.5 months out of 12 months. Okay, listen, if he takes the interest on drawing at the middle of the every month, you have to consider 15th, every 15th he takes a drawing. Okay, so he has to pay that 15th every month. Middle of the month means you have to consider between 13 to 20, like that. Okay, you have to consider 15. Middle of the month means you have to consider, we have rest of the half of the months here. So John has to pay the interest the rest of the month, because he has taken every middle of the month, means he has to pay the interest for taking drawing the rest of the half months. 0.5 means half months. Okay. So how many months in a year? 12 months. So he has to pay the half months interest. Remaining you have 11.5 months out of 12. Okay. So then you have to add it. 11.5 plus 5, you will get 12 months out of 12 months. Okay. So what is the average period? So you have to divide it by 2 to find out the average period. Then you have cancel it. You will get 6 months out of 12. Okay. Then if John's taken at the drawing at the end of the every month, then listen, at the end of the every month you will consider between 20 to 30 these days for every month. Let's take 22 at the end of the every month. 22nd, John taken drawing 1000 rupees at every month 22nd. John can't pay the interest for that first month. Okay, for the first month he can't pay the interest. So rest of the month out of 12, that is 11 months, right? So for these 11 months only, John has to pay the interest for taken drawing, because at the end of the month only he withdraw cash from his business. So he can't pay that first month interest. Okay, so rest of the month only he has to pay the interest. So how many days, how many months for rest of the months out of 1 year? There are 11 months. Okay, so we have to cancel that first month interest. Okay, so you have to find out the interest, which means 11 months out of divided by 2, you will get 5.5. 5.5 means out of 12 months. Okay, so this is the calculation for the monthly wise. If John's take at the beginning of the month, you have to take the average period is 6.5. If the John takes withdraw cash from his business at the middle of the month, you have to take the period, average period is 6 divided by 12. If John's withdraw cash from his business at the end of the month, the average period is 5.5 divided by 12. Okay, let's take the first situation at the beginning of the every month. Okay, John withdraw cash from his business at the beginning of the every month. So we are going to use this as the format. Use the format. Okay, what is the format for average period? That is, the average period interest on drawing for the average period is total amount of drawing into rate of interest into average period divided by 12, right? So he withdraw at the beginning of the every month. The total amount of withdraw is 12,000 rupees. Rate of interest 5% per annum means 5 by 100. And average period, what is the average period format? Average period is at the beginning of the every month 6.5% divided by 12 as per the format we applied here. Now we have to cancel it to find out the interest on drawing for the beginning of the every month, right? So now we have to cancel it. This 20 is to be cancelled for this 20, right? So 112 is 12. 10 12s are 120. Remaining we have 10 into 5 into 5, 6.5. For this point you have to cancel this 10. Remaining we have 65 into 5, right? Then we have, after multiplying, 5 5s are 25. 6 5s are 30 plus 2, 32. So you get the interest on drawing 325 rupees at the beginning of the every month. Okay, then the second situation is if John withdraw cash from his business in the middle of the every month. So in the middle of the every month, what is the average period in the middle of the every month? 6. Okay, so you have to write the heading, that is, if withdrawings are made in the middle of the every month, the average period is 6. What is the interest on drawing for the average period method? Total amount of drawing into rate of interest into average period divided by 12. What is the total amount of drawing? 12,000 rupees. Rate of interest is 5%, means 5 by 100, and average period is 6. Average period is 6 out of 12. Okay, now we have to cancel it to find out the interest on drawing for middle of the month. Now we have to cancel it. This 20 is to be cancelled for this 20. 1666 2 6 are 12, right? So 1 2 is 2, 60 12s are 120, right? Remaining we have 60 into 5. Okay, 5 6 are 35. This 0 is to be added here. So listen, sorry, 5 6 are 30, right? This 0 is to be added here. So we get 300 rupees interest on drawing at the middle of the every month. Okay, then we are going to find out the interest on drawing at the end of the every month. So what is the end of the every month? The average period of the end of the every month is 5.5%. Okay, sorry, 5.5 means average period is 5.5. So we have to write the heading, that is, if the interest on drawings, if drawings are made at the end of the every month. Okay, what is the average period? 5.5. Okay, what is the format for average period to calculate the interest on drawing? Total amount of drawings into rate of interest into average period divided by 12. We know the total amount of drawing, that is 12,000 rupees. Rate of interest is 5%, means 5 by 100, and average period is 5.5 out of 12. Okay, listen. So as per the format, average period divided by 12. Okay, so the average period is 5.5 divided by 12. Okay, now we have to cancel it to find out the interest on drawing under average period method. So 12, first we have to cancel this 20 for this 20. 112 is 12, 10 12s are 120. Okay, remaining we have 10 into 5 into 5.5. This one digit, this point for after one digit we have to cancel this 10. Remaining we have 5 into 55, right? So 5 5s are 25. 5 5s are 25 plus 2, 27. Remaining the interest on drawing under average period at the end of the month is, every month is 275 rupees. So 275 rupees. Do you have any doubt? Please comment it on the comment box. Please subscribe my channel. Thank you.